interesting to see that share price move down about 1% so far, as ArcelorMittal reporting that 2/3 fall in full year earnings. And that is because of a number of issues, as he mentioned there, energy being one of them, inefficient rail operations, as well as the tougher global market conditions. But let's look at the markets now. We have Asian shares tracking Wall Street lower as a number of U.S. Federal Reserve speakers continuing to echo Fed Chair Jerome Powell in saying that interest rates are set to go higher, capping risk sentiment, but also having the dollar hovering near a 1-month high. Locally, markets are closely watching tonight's State of the Nation address by President Cyril Ramaphosa. Though the address is not traditionally market moving, President Ramaphosa will have a platform to outline plans on how to deal with the power crisis, and hard-hitting reforms may also be mentioned. Investors will be looking on hints when it comes to the impending cabinet reshuffle in the president's speech. But to talk to us about the latest market dynamics, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton. Patrice, thank you so much for your time. I just mentioned in my intro there that we are looking forward to that State of the Nation address. How are markets, and I suppose even the Rand, performing right now as we head into that speech later?
Yes, Anastasia, to your viewers, the Rand has been on the back foot for a number of days now, really triggered by a more hawkish stance by the Federal Reserve Chairman. Really, with markets starting to realize that maybe we're not at the tail end of the series of rate hikes from the Fed, and that has led to renewed strength from the US dollar. So it's a combination of dollar strength and also some specific factors, I would say, which has affected the Rand. There's a lot of broadly negative news in emerging markets. You would know about the heavy death toll in Turkey. So far, I think 14,000 lives lost due to the earthquake. There's the whole balloon incident with China. So a little bit of risk-averse behavior and sentiment, which seems to be impacting the Rand, and then the more specific, essay-specific news, which is addressing the issues of load shedding and the cabinet reshuffle.
Let's talk about that issue of load shedding, because a lot of the companies that reported trading updates, we saw those eye-watering amounts that they're having to pay in order to run those diesel generators, Pick n Pay being one of them. If we're to look at Pick n Pay versus Shoprite, Pick n Pay saying here that they have to reallocate capital, and you then wonder whether that might stall the main store, main brand rollout. How do you look at Pick n Pay versus Shoprite at this point?
Yes, I think very good question. I think, as you already said, there are a number of costs which are now embedded in the system, which are impacting both parties. So we saw from Shoprite the cost of basically procuring diesel to the tune of 600 million Rand. We also have the costs that have been incurred in terms of improving health and safety. Pick n Pay is talking about bonuses of 1,000 Rand per frontline employee. So these are additional costs. But the concern on Pick n Pay, we see the share price down 3.7%, is that the top line growth seems to be lagging not only Shoprite, but also rivals like Spar and Woolworths. So losing market share really versus the rivals. And I think this is what's concerning the market, with Shoprite being especially resilient.
The consensus view on U.S. rate cuts, and I think I don't know where I sit, especially when I look at some of the comments coming through from various market participants. I mean, does it mean that Fed Chair Jerome Powell has to come off a lot more hawkish, or do you believe that the other Fed presidents have, I guess, bridged the gap in terms of what was missing last week versus now?
Yeah, it's quite interesting. I think the Fed chairman has been quite consistent that he didn't see rates being cut in the second half of the year like the market was discounting. The other Fed members, I mean, Raphael Bostic being one, Neil Kashkari, have been a lot more hawkish in terms of saying that it's not a slam dunk that we are at the end of rate increases, and there's even a chance that they might move back to a 50 basis points hike instead of 25 basis points if they're not satisfied that inflation is going towards a 2% path. So I think this is what's caused a little bit of turmoil in US and global markets, because there's no great consensus between the Fed members that we are on the right path yet. And the latest payroll numbers showing very strong employment growth in the US, actually abnormally strong employment growth in the US, shows that the economy is so resilient that maybe the Fed has been too gentle in terms of interest rate hikes.
On that note then, say for the next 3 months or so, what will be some of the risks for you that you're paying attention to, the so-called canary in the mine?
Yeah, that's a very good question, the canary in the mine. I think everyone is still focused on inflation as a key number. We saw in the ECB today, again, a release of German inflation coming down from heights of double-digit inflation to 8.7%. I think in the US, the key will be not so much the headline number of inflation. We know that goods inflation from high levels are coming down, but services inflation is what everyone's going to look, and core inflation, a decline in core inflation will be key. And if that doesn't happen, I think the market will start to worry that it's been too dovish in terms of expecting rates to be cut at the tail end of 2023. So we might have a much higher level of interest rates from the Fed for longer.
Patrice, thank you so much for your time. That is Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Looking at my screen, Rand trading at 1767 again as we count down to that State of the Nation address later this evening. Looking forward to hearing some of the key inputs that President Cyril Ramaphosa will be outlining, and also looking at that market reaction.